Good morning, everybody. Welcome to the market brief brought to you by Anzo Capital. My name is Nick. I'm going to be taking you through it, and today we're going to be checking about the most anticipated news that we're looking out for today, which is the CPI coming out. All right. So, being a CPA day, first thing you should know is that I'm not predicting the outcome. I'm just reacting to the market data or the data that's going to be coming out. All right. So my focus today will be more of looking at the headlines. I'm going to be looking at the core CPI, initial moves of the market, and treasury yields. We're going to look at the USD. We're going to look at the gold. We're going to look at the Nasdaq, how they're going to be reacting. All right. Remember, don't take any trade before the news. Right. No trades before the news. Right. So this is how we're going to be breaking it down. We're going to be doing this step by step. So at the release, once the market just came out, or once the report just comes out, this is what you're going to be looking at. We're going to look at the two scenarios. Should we have the bullish USD and bearish gold? If that happens, it means these are the scenario. Basically, this is what it's going to be mean is that if the CPI comes in above expectation, it will mean that inflation is hotter than expected. It's going to make that the market may price in more hawkish on the Federal Reserve and the USD, of course. Then the USD is going to be strengthening. Treasury yield will strengthen. Gold usually sells off, and Nasdaq often weakens. All right. So that's a scenario one. A scenario where we have a bearish USD and a bullish gold scenario, it means that the CPI comes in below expectation. What does that mean? It means that inflation is cooler than expected. There's rate cuts, expectation increases. The USD will weaken. The treasury yield will fall, and gold typically will rally. Nasdaq on the other side, strengthen. All right. So how do you plan your trade when it comes to trading such a volatile market on the CPI or something like that, right? So number one, you're gonna do is allow the first spike to settle first, right? Make sure the first spike, just allow it to settle. Then wait for the retracement. Once you do the retracement, you can either now buy or sell depending on how the news comes out and where the market is pulling now, and the confirmation, of course, that you have, of course, right? On the USD pair, again, you can also sell and or buy depending on where the market is going, and look at the momentum. If the momentum continues on the USD, that should guide you on what to do with the treasury yield on the gold and on the Nasdaq as well, right? Now, there's another scenario that we oftenly forget to look at. What if the CPI matches expectation? Right? If it matches expectation, it means that the numbers are close to forecast. The numbers will be closer to the forecast. So what you're going to expect in the market is that we'll have a whipsaw price action. We'll avoid what you need to do is to avoid forcing the trade. Do not force the trade. All right. Wait for the market to choose a direction. Once the market chooses the direction, trade only after a clear breakout and retest. All right. Now, on the risk management, which is very important, I'm always a student of risk management. You should always risk 1 to 2% of the account per equity. All right, 1 to 2% of your account's equity per trade. Sorry. Yes, this is my personal recommendation unto you. All right, 1 to 2% of your equity per trade, and accept that missing a trade is better than entering a poor trade. Okay, so that is very important. So let's do a quick run through on the checklist what you're going to be looking at. So number one, the most important thing that you need to know right now before you even enter on the CPI, the most important thing that you need to know is, first of all, know the expectation. What is the expected CPI numbers that are coming out? Watch the DXY first. Observe how the DXY is behaving. Monitor treasury yields. You need to look at them. They're going to give you a hunch on where the market could be headed, right? Monitor the treasury yields. We've said that. Confirm the direction with the price action, right? Do your price action technical analysis. Confirm the direction. Maybe the market may come to fill in some gaps that are there. Maybe the market may come to do some weak fill on the other side. And the market tends to respect the structure that the market is forming, all right? So wait for the pullback. Execute only if your setup meets your plan. Again, you need to have a trading plan. Very important. If you need to know more about the trading plan, we'll go to our YouTube channel, Anzo Capital KE. Over there, I've spoken a lot about the trading plan and the checklist that you need to have over there. All right. Make sure to subscribe again, follow us, share, subscribe, and of course, be waiting for put in the alarm button. Be waiting for any new content that is coming out. We're gonna be doing it each and every day. All right. And remember to always protect your capital. Again, like we always say, trade what you see, not what you think. All right. Have a good one. That's it for the market brief this morning. Awaiting the CPI. Get ready. Get ready. Let's meet you on the charts. All right, everybody, good day. Have a good one and take care.